Hello again, people. Right, bit of a coincidence this morning. I was just about to start doing a video on the 3-candle reversal, and at RidingTheTrend on Twitter asked me a question about 2Bs. Would I put together a video about 2Bs? So, I mean, 2Bs are amongst my favourite chart pattern, favourite subject to talking about. So this will have to be probably part 1, maybe even part of 3, definitely of 2 videos. So 2Bs are just they were what inspired me to push on with candlestick analysis as opposed to swing analysis. And by candlestick analysis, I just mean this 3-candle thing here. High, low, lower high, lower low. Although I know it's not a lower low, the green candle, a lower high rather. It is a lower low. So it does suffice for my requirements. And once we get a break and close above the higher, the initial, what I call the penultimate candle, then I consider the trend to be over. And the downtrend. But we don't just trade them arbitrarily. We use the lower time frames to time our entries using the reversals, watching for 3-candle reversals, this scenario here but in the opposite direction, and then using my precise pip breakouts and stuff to actually validate or invalidate the moves. So anyway, we're not talking about the 3-candle reversal anymore. Now we're talking about 2B reversals. And the reason that I moved on to 3-candle reversals away from 2B reversals was the precision. I needed to understand why 2Bs failed, and therefore I had to start using something else. And it wasn't just the fact that 2Bs failed. I then realised that I could use a 2B to enter a 2B. So it's like it's a pattern within a pattern within a pattern within a pattern. And because there are so many 2B reversals all over your charts, you can start to understand that they are a high probability repeatable pattern, and as such can be traded with some sort of consistency. So it's important also to remember, first thing, go and have a look at a pattern, Google or whatever search engine you use, 2B reversals Vic Sporandio, and there's a really nice white background. I think the candles are blue and white or something like that, and it's annotated well, and you've got a 2B long reversal and a 2B short reversal. He also has a lovely pattern which is the 1 2 3 reversal. So I can just show you a vague idea. This is a 2B reversal here. You've got swing 1 2 3, and then you continue up. A lower low has been broken by a new lower low. On a 1 2 3 reversal, you've got this situation here. You've got the it's almost the head and shoulders, isn't it, to be honest? But you've got the swing up, the swing down, the failure to make a new swing high, and then the continuation. It's a failed higher high. Same here. So it goes on. They are everywhere. There's 2Bs all over the place. This is a 2B here. And the point I made about going to look at the Vic Sporandio's actual original documents, I think you'll find it on a website called DA Charts, maybe .com or something like that. But you'll find it soon enough anyway. This is a 2B here. Swing 1, swing 2, swing 3, and then the reversal. So Vic Sporandio says put your level on the low of swing 1, and then wait for a candle to break it, which would have been this one initially, but then he talks about and any subsequent candles. So this one then becomes the subsequent candle that breaks through your low, and when we get a break above that, we go long. Now he said just to break above it. I prefer the close. And once again, this is a move in the direction of adding security, if you like, adding reasons for it to be safer to enter with a close. You know, traders all know that closes are far better than just trading a breakout, because a close will tend to cause a reversal. The breakout will cause a retest of the level broken. In this instance it didn't, but if you watch any of my other videos you will see how often, how regularly we get pullback. So if you get a weekly reversal to the long side, or a 2B reversal, here's another one here, swing 1, 2, 3, then you can bet your bottom dollar you're likely to have quite a large amount of time in order to consider taking shorts before you continue to the long side as a result of the 2B reversal. So this instance here, you've got reversal within reversal. You've got a swing 1, 2, 3, and then you've got your swing 1, 2, 3, and it goes on. They're just everywhere, 2B reversals. So there's one there to the short side. That's a higher high. So you draw your bar, the break of this bar here, because you would have drawn your resistance on swing 1, 2, 3. That's the now the trigger or poke bar, whatever you want to call it. The minute you could break below that, or in my case close below it, which was this candle here, then you've got your continuation down. So they are absolutely everywhere. So I don't know whether I just said this, but I get distracted very easily with these chart patterns, I'm afraid. I do apologise, but disregard the candle count, just concentrate on the pattern. So, you know, if we move over here, we can see, excuse me, that's a 2B reversal there, swing 1, 2, 3. So in this instance that's the low, so anything that breaks through that becomes the reversal level. So you draw the high on that candle there, and the break and close above that, potentially this one, this green candle here, I hope you can see that. And then what does the price do? It just goes up. So and this is where the RSI, my choice of non-repainting super duper duper indicator, would help you as well, because once you get your momentum, you drop down the time frames, watch the reversal to wait for a precise entry. I would suggest my 3 candle reversal, because it's sort of usurped the 2B reversal now. 2B reversals, in my opinion, are not as precise as what I do. What we've got here, there's a 2B reversal there, swing 1, swing 2, swing 3, and breakthrough. The break of this candle low here is the trigger bar, poke bar, I can never remember which one is which would be this bar here, as the break and close, and you'll consider your entry as a result of that. There are ways to trade it. I don't know whether he suggested it or I devised it, but obviously you don't want to hold a trade forever. So let's go back to this original example over here. Just trade the pullback. Let's suppose no, that's not a good example, I do apologise. Even that one's not a great example either. What I'm trying to say is, you trade to the first resistance in a long trade, take profit, move your stop, take half profit, say, move your stop to break even, and then let the continuation go on. So where's a good example of that? Well, I suppose this is swing 1, swing 2, swing 3. That's the first take profit, and there would be your final take profit. Okay, so did I say this one is your first take profit? In fact, yeah, no, I did say this one, didn't I? That's your first take profit. And then if you've got another swing up there, take another profit. And this is where Vic Sperandio said the original end of that potential trade, according to the 2B rules, would be over here. So you can trade them quite carefully. You put your, so you just need to study it yourself. Here's another one here. That's swing 1, the main swing. That's swing 2, that's swing 3, and the break of the low there. In fact, it didn't break it, did it? So I do apologise. Let's use that as an example though. Let's suppose this did break through here, and then you would be trading the break of the high there, which is that candle there. That's the break and close. There's the good old pullback again, and then first take profit is here, and move your stop to break even or whatever you want to do. And then second take profit is the high of swing 1, which is up here. Swing 1, swing 2, swing 3, break of swing, break of the poke or trigger bar. I suppose that's the trigger bar and that's the poke bar, thinking about it, isn't it? And then always be prepared for the pullback, in which obviously you can use the 2B reversal if you wanted to. This is a weekly chart, so oops, I need to take the scroll off. Let's find what that is again. Right, what date is it? 8th of the 2nd, 2009. My God. So go down a time frame. Hopefully we won't run out of data. No, we've got enough data there. This is the pullback. I hope we can get data for H4 on this. You can tell I've not cherry picked any of these, which is good. 2008. Yeah, we're all right for swing for the 4 hour. So here's effectively that pullback, and as you can see, it is almost a 2B. Again, this one's a 1, 2, 3 reversal where it failed to make the lower low. But let's just, for argument's sake, again pretend that's a 2B reversal there. Swing 1, swing 2, swing 3, and this is your high. So we need the low of the poke bar on there, or the low of the initial bar rather, of swing 1, swing 1, swing 2, swing 3. Then we put the high of our pretend bar. Obviously it is lower, it's there. That's our pretend bar there. High of the pretend bar, there's the close above it, there's the pullback again, there's the continuation. And I don't think we're going to get an hourly, but you will find that there will be a 2B reversal here as well, more than likely, and you could use that 2B reversal to get into this 2B reversal, which is getting into this 2B reversal, that big old thing that we've just mapped out on the weekly chart. And that's how you use, in my opinion, these massive chart patterns on the higher time frames. You can use the lower time frame, same chart pattern, which is no different than my 3 candle reversal, to build up a trading plan in order to target these huge areas up here. So you know, that's part 1 of 2B reversals. I shall put together a part 2. Don't know what I'm going to talk about yet, but there is so much to talk about 2B reversals that it is just mind-blowing. Okay, thanks for watching. Have a good day.